And we are live. Good evening, everyone. Another day, and another bank is on the brink of collapse. And what we are witnessing right now is the failure of centralized institutions and centralized protocols. And what I find funny and ironic about all of these banks collapsing and the runs that we're experiencing and witnessing on the banks is that one of the biggest critiques that so many people had against crypto was that it's too volatile. It was that, how could you put your money into something that's not regulated and that you could wake up tomorrow and it could be down 60%? And we're sitting here and we're watching banks like First Republic literally trade like a meme coin. Literally, it dropped 47% in one day. And, you come across so many people who they hang on this idea that crypto is a scam, right? Because it's not regulated, it's not controlled by anyone. Yet we're watching banks literally show you and reveal to you that they're running a Ponzi scheme. They're running fractional reserve operations. They're taking your deposits and they're investing them into other assets. They're lending it out. And then when the people are coming back to get those assets, they don't have the deposits to give the depositors. And they are experiencing in modern day runs on a bank. And I've been sitting here now narrating and documenting this for you for well over 2-3 years now. So there's no way that I know these things sitting here in my office. I don't have a PhD in finance and economics, although I did go to school for financial engineering. But I don't have all of the fancy accolades. I don't go to Davos. I'm not at the FOMC meetings. Yet I can predict what's going to happen. But yet you're telling me the best and the brightest people in the world, they cannot predict it? And we're witnessing now the banks get together, the big banks, the SIBs, the systemically important banks, to bail out the smaller banks. But what we're witnessing is that the holes in the balance sheet of the banks that they're trying to bail out are too big. Now, mind you, because see, this is what Bitcoin was created for. If you go here into the Genesis block, this was the original block mined for Bitcoin. And inside of it, Satoshi Nakamoto embedded a message. And it stated that the chancellor is on the brink of a second bailout. And that article was from here, Saturday, January 3rd, 2009. And here we are now in 2023, and we are experiencing more bailouts. They're going to try to spin it and say, well, it's not a bailout because it's not taxpayer money. But don't worry, soon it will be taxpayer money. And then the Fed was trying to signal that they wanted to be tough about inflation, the inflation that they created, because understand that money is debt. The only way the economy can grow is with debt and inflation. So the Fed wanted to signal to the market that they were going to be tough on inflation. And I told you that as we keep going through these debt cycles, the cycles, they become quicker and quicker and quicker because we live in the information age now. So information spreads very quickly. And people can now start to see, okay, the same data and information I have, the hedge funds, the institutions, they have the same data, if not better data. So therefore, they are able to act on the information much quicker, which is why we're starting to experience this boom and bust cycle moving much quicker. So the Fed tried to get tough. They tried to do quantitative tightening to reduce the balance sheet. They then tried to go out here and raise interest rates. And here we are now, about a year later into this experiment, and we're already experiencing banks collapsing, right? Bond yields blowing out. And yet now the Fed has to come right back in and now erase almost a year of quantitative tightening within a matter of a week. They already started printing money and injecting it back into the financial system, i.e. printing money. But see, what we're witnessing here now is on Wednesday, there is an FOMC meeting. And Jerome Powell is going to have a serious decision in front of him. Is the Fed going to raise rates at all? Will they do 25 basis points, 50 basis points, and stay on this path of trying to be tough and signal to the world that the dollar is the reserve currency and they're willing to protect the purchasing power of the dollar? If the Fed continues on that path, we are going to experience 1929 all over again and the start of the Great Depression. Now, I always say to you, history doesn't repeat itself, but it damn sure rhymes. And if you go back to the 1920s, that was known as the Roaring 20s. The economy was plentiful, interest rates were very, very low, the Fed was accommodative, and America experienced the boom. And then 1929 happened, and the Fed started letting banks collapse. And when they started letting these banks collapse, the money supply then contracted, and then we went into a Great Depression. Or, which is what most great empires do right before they crash and burn, we're going to go to the inflationary route. And I personally believe that there's just no way, and I've been saying this, that the Fed can stay on this path for an extended period of time when we live in a day and age where the Democrats want everything free. And we live in a day and age of public outcry, and we have all of the social justice warriors. There's absolutely no way that they are going to allow interest rates to stay high for a sustained period of time. The Fed is going to have to cave like they're already starting to do because the contagion is going to continue to spread. Because this is what happens when you run a centralized economy. And we're witnessing centralization fail. And we're now starting to see the need for decentralization. You know, like I said before, and shout out to my brother JT, but I remember when I went on his platform and so many people, like, they were so skeptical as to why do we need decentralization? You know, I have Cash App, I have Venmo, I have my bank account, I have PayPal. And we're witnessing right now in real time why centralization is a problem. Because at the end of the day, if everyone wants to come get their money at one time, the banks don't have it. And when people say, well, the FDIC insures up to $250,000, where do you think the FDIC gets the money from? It is created out of thin air. They will try to sit up here and tell you that, oh, that's insurance money. That money is being printed out of thin air. It is not insurance money. But see, again, you know, at a certain point, you have to understand that old keys, right? Old keys do not unlock new doors. And we are in a new paradigm right now. And which is why Satoshi Nakamoto embedded this in here, because clearly he could see back in 2008 that there's something fundamentally wrong with the way that the banking system is constructed here in America. So, with that being said, guys, you know, there's a lot that I want to get into today, that I want to speak about and talk about, because these are things that I've been talking about for a while. But Wednesday's going to be a big day. And I believe that eventually what's going to happen is people are going to see the problems with the banking system, because, see, this is not just an American phenomenon. We had Credit Suisse now experiencing problems with their bank because all of the banks are bankrupt, right? In reality. So definitely I believe that soon what we're going to see is a decoupling with crypto. And we're going to wake up one day and look at Bitcoin is already sitting at close to $30,000. Literally half of where it was at its all-time high. It's almost sitting right there right now. All it takes is for QE to start again, and Bitcoin will be at $60,000 in a matter of no time. So I believe eventually the world's going to wake up and realize that the risk is really the dollar, and that the risk is the banking system, and people are going to want to put their money somewhere else. And that's where crypto is going to shine. So please do me a favor, like this video, share this video, subscribe, hit the notification bell. Make sure that you set the notifications to all. If you are not receiving my notifications when I go live, there is a telephone number in the description below. Text the word YouTube to that number. Therefore, when I go live, I will text you to let you know that I am going live. Also, if you want to follow me on Instagram, I upload content much more frequently on Instagram than I do on YouTube. A link is in the description below. Please understand, use the link in the description, because if you go and try to search for me on Instagram, I am the most duplicated and replicated person on Instagram. There's a ton of scammers that are cloning my page trying to scam you. Now, use that link. Also, Understand, I will never DM you first. I am extremely busy. I will not ask you how your trading's going. I will not ask you to put money in an account. I will not ask you to cash at me. I am not kidnapped in the basement somewhere by African princes. Please don't fall for any of these foolish scams and schemes. If you want to invest with me and you want to do business with me, there is a telephone number in the description below. You will text the word invest to that number, and then I will send you the investment opportunities that we have right now. Please use some common sense, which is why I named my channel What Happened to Common Sense. And last but not least, I am the founder and creator of My Tech Academy. We have a free 3-day trial. You can come test it out. We cover all things Web3, all things crypto. We have a trading mentorship coming up right now. It is going to be extremely important that you learn some of these skills, especially with the amount of volatility in the markets right now. There's a lot of money to be made with trading futures. We have a course that's getting ready to be released next week. A link to sign up for that is right here on the page. A link to My Tech Academy's website is in the description as well. We have an IT course. We have a business credit course coming up. And we also have an artificial intelligence course coming up. So again, if you want to make sure that you are learning the skill sets to prepare yourself for the future that's to come, My Tech Academy is the place to go. And we have a free 3-day trial. As long as you cancel it within the first 3 days, it's absolutely free. And you can also book a consultation with me if you have any questions, concerns about business, about crypto, about trading, etc. With that being said, guys, we can get ready to get started. And you can sit here and type 1 in the chat if you can see and hear me clearly. There we go. So, here we go. JP Morgan CEO Jamie Dimon is leading efforts to craft a new First Republic bank rescue plan. So let's read this a little bit. We're going to read the first few paragraphs. The discussions, while preliminary, have focused on how the industry could arrange for an investment that would boost the bank's capital, according to people familiar with the matter. Among the options on the table, the people said is an investment in First Republic by the banks themselves. Now understand, if the banks are bailing out the banks, who's going to bail out the big banks? We know who's going to bail out the big banks, the taxpayers. 11 big banks banded together last week to deposit $30 billion in First Republic in an effort to restore confidence in the lender. The San Francisco-based bank's customers have withdrawn some $70 billion since the collapse of Silicon Valley Bank earlier this month, the Wall Street Journal reported. And now, let's look at that run on the bank that they are experiencing right here. You can see that this is one of the bank branches here in California. And let's play this real quick. People are lining up to get their money out of the bank. And we can see that it's First Republic Bank because they have the green awning and the green sign right there. Look at the line. And that's a small branch. Now, remember, this isn't a big bank. This is a small bank. And they're already having these problems and experiencing these runs on the bank, similar to what happened with Silicon Valley Bank. Now, again, I want you to think about this for a second. They came up with $30 billion, and it still wasn't enough to shore up this bank, right? Now, again, we always hear people talk about crypto being a scam. You are witnessing and watching a scam unfold right before your very eyes, yet you are going to still leave your money in the bank, and you're still going to do business with these banks, knowing that they don't have your deposits. See, you know, the true definition of insanity is doing the same thing over and over again and expecting a different result. Here it is. Crypto's a scam, but your bank is not a scam. Your bank taking your deposits and lending them out and paying themselves bonuses, right? And investing in assets, that's not a scam. Now, I want you to think about this for a second. The bankers, when you go to get a loan or you go to get a mortgage, they need 3 months of bank statements. They need your rental history. They need to know your debt to income ratio. They want to know where you went to college at. They want you to have a cosigner. They are overlooking every single thing you put on that application. But when it comes to who they lend money to, or when it comes to what they invest into, oh, they don't, we forgot. We didn't manage the portfolio properly, right? They take insane risks with their investments, with your money. But when it comes time to giving you money, oh my God, they gotta cross every T, they gotta dot every I, just for them to say, oh, well, we only could give you $200,000, right? It is amazing to me the level of incompetence that we are experiencing with many of these banks. Now, let's finish reading the article. It says, the plan could involve the banks converting some or all of the $30 billion in deposits into a capital infusion, some of the people said. The situation is fluid and fast-moving. First Republic is facing intense pressure to reassure investors that it is viable. Its stock has lost more than 90% in March. Shares closed down 47% at $12.18 on Monday. After the Journal first reported on the talks, it was the stock's lowest closing on record. Now, I want you to think about that for a second, right? First, we had Silvergate. They tried to dismiss that and say, oh, well, they got into trouble because they was doing business with crypto lenders, okay? Right? Then after that, we had Signature Bank. Then it was Silicon Valley Bank. Then it was First Republic Bank. Also, then it was Credit Suisse. So as you can begin to start to see, as I've been saying to you guys before, if the Fed continues to raise interest rates, they only can keep raising rates until something breaks in the economy. And we're already starting to see something break. Again, I say these things and I keep repeating myself because there's new people coming in and there are those of you that are skeptical. I've been saying this. Now, again, remember, we're early on in this and things are already starting to break. Now, what you have to start saying to yourself, what happens to the national debt? Because if you have $30 trillion of national debt and over $100 trillion of unfunded liabilities, and your asset prices are being devalued because you're experiencing deflation because of high rates, that means you're bringing in less capital gains taxes. So therefore, you have less tax revenue to fund the government, right? And it's going to cost you more in interest payments because the interest rates are going up. Do you understand how much it's going to cost the federal government to pay 5, 6, and 7% interest on $30 trillion? See, that's the real problem. And that's where the hyperinflation comes into play. What we're witnessing right here is nothing compared to what's to come in the future. And as I said earlier, and I'll say it again, you sit here and you look at this bank's price, the price of the shares, and how it's crashed. And yet people will sit up here and tell you that somehow crypto isn't safe because it's not regulated. Yet we just watched a regulated bank drop 90% year to date. Year to date. And don't tell me, well, there's insurance for the depositors, because that insurance is going to come from inflation. Therefore, your currency is going to be debased and going to be devalued. And now when we look at this, uninsured deposits by banks, we can see that Bank of New York Mellon has 97% of its depositors are uninsured, meaning that they're over $250,000. SVB, 94%, State Street, 91%, Signature Bank, 90%, Northern Trust, 83%, Citigroup, 77%, HSBC, 73%, First Republic Bank, 68%, and East West Bank Corp, 66%. There are now a total of $8 trillion of uninsured deposits in the U.S. Now, what do you think? And this is why you're starting to see the run on the banks. Because if I'm a rich, wealthy person, and I say this to you guys all the time, dealing with banks is one of the hardest things possible. If you have a lot of money in the bank, let's say you got $300,000, $400,000, $500,000 in the bank, and you want to go to the bank and you want to pull your money out the bank, they don't have it. They have to then, number one, you got to fill out a form to take out anything more than $20,000, $30,000. They're going to question you what you want to do with your money, Why do you want your money? And then they're going to tell you that you're going to come back and get a check. Now, this is why crypto is the solution, because it's permissionless, it's borderless, and it's censorship resistant. Meaning, right now, all I have to do is simply take my ledger, connect it right here to my computer, and I can access my Bitcoin, my Ethereum, anywhere in the world at any time, and I can send it to anyone. And there's no third party that is overseeing my transaction. There is no one that I have to ask for permission to be able to access my money. And see, many of you don't understand the importance of decentralization. It's not so that you can go out here and speculate on meme coins. Satoshi Nakamoto and many other cryptographers, they were able to see that there's a problem with centralization, that there's a problem with banking, and understand that now, because everything is moving digital, and as I said to you guys, because everyone's depositing their money into the big banks now, because everyone's afraid of these small banks. Because after watching Silicon Valley Bank fail, wealthy people say, I'm pulling my money out of here. And what are they going to do? They're then taking their money and they're depositing it with the big banks, the systemically important banks. Why? Because they are too big to fail. So you have Citigroup, you have JP Morgan Chase, you have Bank of America, you have Wells Fargo. They were able to acquire all of these banks since 1990. It's the problem. Because now you only have 4 big banks. That's extremely problematic. Now, I told you guys what's going to happen. You're going to wake up one day and you're going to experience a bank holiday. If you don't believe me, go and do your research. Bank holidays have happened before. It's going to be a Friday morning or evening. The banks are going to close, and then they're going to take all of your deposits because, see, you're creating a honeypot for the government. And big business and big government go hand in hand. And you're going to experience a bail-in, where basically overnight they're going to devalue the currency. They're going to take your deposits. They're going to cut interest rates to -2%, meaning that you're going to have to pay the bank in order to put your money in the bank. And then they're going to deem all cash illegal. You're not going to be able to use cash anymore. And they're going to give you a government-issued wallet. You're going to get a CBDC, which stands for a central bank digital currency. And you're only going to be able to use that currency at government-approved locations. This is what's going to happen. Now, it may happen next month, next year, or in 3 years. But you can already see the writing on the wall, which is why people like Satoshi Nakamoto and other famous cryptographers for years have been trying to figure out a way to create a decentralized protocol where you did not have to trust any third parties, because big government and big corporations go hand in hand. And I say this to you guys all the time. They pass rules and regulations to crush competition. John D. Rockefeller said it the best. He said, competition is a sin. Rockefeller once said, and he had certainly done his part to stamp out the sin. You know what they do? They pass and they craft rules and regulations that make it very expensive for you to get into that industry. And not only do they make it expensive, but understand that when you got the federal government backing you, you can take risks that other banks can't take. So therefore, it renders small banks uncompetitive. And now what starts happening is, because I feel safer with my money in a big bank, I pull my deposits out of a small bank. So this is how the big get bigger. And this is how the rich get richer. Now, one of the individuals that I've been following, and she does a terrific job of breaking this stuff down, is Lynn Alden. I want to pull up what she said, because I think that this is important, the way that she breaks this down. And I wish I could find it. I think I skipped it. I had it over here earlier, but she was talking about how the limited amount of banks that currently exist. And matter of fact, it's back here. I want to make sure that I can pull this up, because she said in 1971, there were 13,000 banks in the United States with 23,000 branches. In 2021, there was just 4,000 banks with 77,000 branches. What does that mean? We had more competition back in 71, But what are banks doing now? They're consolidating power up into the elite's hands. And see, this is where there becomes a conflict of interest, which is why I got to laugh at people when they talk about scams. The government is the biggest scam ever. Regulation is one of the biggest scams ever, because the people who are creating the laws and creating the rules are the same people that work in the private sector. Hank Paulson and Timothy Geithner, who were the Treasury secretaries, went from Goldman Sachs and came over, worked in government, bailed out their friends paid record bonuses, and then they went back to working in the private sector. And we see this happen all the time. But yet somehow people will look at that and say, that's safe. That makes sense to me. That the very people who are deregulating these industries or regulating these industries, because it doesn't matter if it deregulates or regulates, at the end of the day, it's just a game at the end of the day. It's just a word. They're going to make sure that the rules are always stacked in their favor and that the odds are always stacked in their favor. And they're going to gamble with your money, which is why we keep experiencing these boom and bust cycles over and over and over again. Now, I think that this is important because this individual right here was asking Janet Yellen an important question, whether or not small banks will be insured. And listen to her answer. All right. I think it's this one. Here we go.
In Oklahoma, regardless of their size, be fully insured now? Are they fully recovered? Every bank, every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVBP just got or Signature Bank just got?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is your plan?
We made that determination.
Right. So the deposits in every community bank.
Now, I want you to think about that for a second. A group of unelected people who are not elected by the American people, who are not accountable to any constituents anywhere in America, are making these decisions. But somehow, this is centralization. This is a small group of people who have power, who have inside information, who are making important decisions about your economic future. And somehow, this makes sense to you. A decentralized open source protocol. Remember, Bitcoin is open source technology, meaning I can audit the entire Bitcoin source code. I know from top to bottom what the protocol is supposed to do. But somehow, something that's open and transparent, that doesn't make sense to you. But a group of men and women getting behind closed doors and deciding the fate of American people and deciding the fate of businesses, that makes sense. Right? That makes sense to you. And like I said before, this is why I know there's no reason why I shouldn't make $50 to $100 million. Because Americans are stupid. I already know what's going to happen. Right? Because see, when you read books like The Creature from Jekyll Island, what government has done to money, The Price of Tomorrow, you know the next play. And as long as you know the next play, I'm just going to keep buying my crypto. Because we're going to wake up one day and just look at this. This shit isn't rocket science. The market cap right now of crypto is $1.1 trillion. $1.1 trillion. Understand that Bitcoin is a baby right now. It's only worth $500 billion. We're talking about uninsured deposits of $8 trillion. What do you think is going to happen when those trillions of dollars comes over to crypto? Overnight, like I said before, you're going to wake up one day and you're going to go, holy shit, Eli was right again. And Bitcoin's going to be at $200,000, $300,000 in a matter of literally days. You know how I know? Because I've witnessed this. I've been doing this since 2012, 2013. I watched Bitcoin go from $15 up to $100, come down to 50, go up to 200 in a matter of days. Because as more runs on the bank happens, as more bailouts happen, people are going to start to see this system is unstable, and people are going to be looking for alternatives. With Bitcoin, we know how many Bitcoin are in circulation. We know that there will never be more than 21 million Bitcoin. We can audit the supply at any time. Everyone knows what the rules are going to be with Bitcoin. We don't know what the rules are going to be with the financial system tomorrow. We don't know what interest rates are going to be tomorrow. The Fed can come out today and they can say 50 basis points. Next meeting, they can say a whole 100 basis points. You don't know. And like Jenny Yellen just said, the FDIC, who is the FDIC board? Who makes up the FDIC board? Did you vote for these people? No, they make the rules as they go. Now, I want to play this clip for you because this was the FDIC talking about why they should not disclose the problem with the banking system 15 years ago. Let's listen to what they had to say 15 years ago.
It's really important. I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge run on the institution. But they're going to be.
People need to know, but I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim. Right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out.
Do you see how like they're laughing? Like, man, we know we're doing some bullshit, but we shouldn't tell the people that we're doing some bullshit because they don't really need to know that we're doing some bullshit. Like, this is how they view you. They view you in such low regard. Like, listen, man, you know we fucking with their money, right? But we ain't gonna really tell them that we fucking with their money. It's like yo, come on, bro. Like, listen, man. Don't go out here telling too much of the sauce. Don't tell too much of the secret. Like, this is modern day finessing. Like, they're just like, this is no different than the scammer from the hood with the credit cards and the fake checks, right? And the PPP loans. The only difference is that they have credentials and they have regulations. And like I said before, this is why I laugh when I hear people say like, oh man, we need crypto to be regulated. By these type of people, these people are crooks. Straight up and down. These people are crooks in a suit. The only difference is they're not robbing you with a gun and telling you to give it up, right? They're robbing you with your signature on a document. I would rather a person show me the gun. If you're going to rob me, show me the gun. At least I have the dignity. At least I could feel scared, right? At least if you stick me up and you rob me, I could go, damn, like, yo, I was a little bit scared. I mean, they robbing you with a smile on their face like, yeah, man, listen, man, we doing some bullshit, but don't tell them we doing some bullshit. You know what I'm saying? Let's play that again. And this is from the FDIC. This is not chopped, screwed, edited. This is a meeting that they had 15 years ago. Someone said, that's a nice status correction. For the ancestors, you heard?
It's really important. I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge run on the institution. But they're going to be.
People need to know, but I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim. Right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
You know, like I said before, man, these people are bold with just the way that they do it, right? Now, listen, you might not like Big T. You may not like Donald Trump. I like Trump. You know why I like Trump? Because he's a straight shooter. One thing about Democrats, they bullshit you, right? They see, I'd rather a person tell me what it is so I can prepare properly. And, you know, many of you, you know, you supported Joe Biden. Now, I'm not going to say Trump is, you know, the greatest president of all time. I just want to play his words for you. What he said, right, back in 2020. I want you to hear what he said. And now I want you to look at what's going on right now. You make your own decision.
All of this incredible job that we've done will go down like that. It will be a terrible, terrible sight. It might even be a 1929 situation, so you have a chance to have the greatest numbers in history. You're almost there. We're almost back to where we were from the standpoint of the stock market. Think of that. But you'll have a crash like you've never seen before. You put the wrong person in office, you'll see things that you would not have believed are possible. All of this incredible job that we've done will go down like that. It will be a terrible, terrible sight. It might even be a 1929 situation, so you have a chance to have the greatest numbers in history. You're almost there. We're almost back to where we were from the standpoint of the stock market. Think of that. But you'll have a crash like you've never seen before.
Now, what is 1929? And I think that it's important that we know these things because, again, what do I always say to you guys? History doesn't repeat itself, but it damn sure rhymes. And if we come back here to the Roaring Twenties, right, and we look at this, the Roaring Twenties was a time of great economic expansion, similar to what happened in the let's say the tens of the 2000s, right, where we had great economic growth. We came from the Great Recession, everything was booming, and then we had this massive blow-off bubble in 2020 because of the pandemic. It says the Roaring Twenties was a period in American history of dramatic social, economic, and political change. For the first time, more Americans lived in cities than on farms. The nation's total wealth more than doubled between 1920 and 1929, and gross national product, GNP, expanded by 40% from 1922 to 1929. The economic engine swept many Americans into affluent consumer culture, in which people nationwide saw the same advertisements, bought the same goods, listened to the same music, and did the same dances. Now, we just witnessed that happen with everybody doing it for the culture. All of a sudden, right? You have motherfuckers coming straight from jail, and now they teaching you how to bust a Toro play. And now you got financial revolutionaries. They was talking about Goldwater and reparations, and now they teaching you high-level conversations and how to astro project, get your credit right? And then now all of a sudden, you know, before they was talking about rappers and entertainers, and now they're the biggest podcast talking about financial literacy. Everybody was a financial guru. You could go get your play on Toro. They could teach you how to go do the Airbnb stuff. The scammers from the hood, they was running the plays with the PPP loans. Everybody had money. Everyone was a genius, right? We just witnessed the 1920s, the Roaring 20s. And then something happened in 1929. Something really, really interesting happened. And if we come here, right, it says, many people criticize the Fed for its response to the Great Depression. How was the Fed's response in 2007, 2009 financial crisis different? The key difference between the 1930s and 2007, 2009 was how the Fed has reacted to the crisis. The 30s, hold on, dropped. It says the 30s, the Fed more or less let the banking system collapse. In the 30s, the Fed more or less let the banking system collapse, allowed the money supply to collapse, and allowed the price level to fall. You had tremendous deflation, and that contributed to the contraction of the whole economy. What are we watching happen right now? We are watching banks collapse. And what is the Fed doing right now? Jerome Powell is still saying what? That he's going to be tough because he has to defend the dollar's integrity. So Wednesday's going to be a big day because the Fed has a choice. Either they stay on this current monetary policy route where they are going to keep raising rates aggressively to stamp out inflation, and they will cause the next Great Depression. Or they will hyperinflate. There's only two ways out of this. And I believe that they're going to choose the latter. And the reason why is because, like I said before, when you go back here and you watch this exchange that Jerome Powell had with Elizabeth Warren, there's just absolutely no way with $30 trillion of national debt, over $100 trillion in unfunded liabilities, that they're ever going to have interest rates that high for that long. Because look at this exchange, and you tell me, what do you think Jerome Powell is going to do?
Rates as you plan, unemployment will be 4.6% by the end of the year.
It's not an intended consequence.
But it is, and it's in your report, and that would be about 2 million people. If you could speak directly to the 2 million who you're planning to get fired over the next year, what would you say to them?
Inflation is extremely high, and it's hurting the working people of this country badly, all of them, not just 2 million of them. And we are taking the only measures we have to bring inflation down.
And putting 2 million people out of work is just part of the cost, and they just have to bear it?
Well, will working people be better off if we just walk away from our jobs and inflation remains 5-6%? It's not as black and white as it. Very
just
very
looking
infrequent.
at the numbers. It actually is pretty black
Alan
and white.
Blinder's written a book on this, and
there have been 12 times that we've seen a 1-point increase in the unemployment rate in a year. How many times did the economy fail to fall into a recession after doing that? Out of 12 times.
I think the number is 0.
I think the number is 0. That's exactly right.
Right now, the unemployment rate is 3.4%, which is the lowest in 54 years. And we actually don't think that we need to see a sharp or enormous increase in unemployment to get inflation under control. Even 4.5% unemployment is well better than most of the time for the last 75 years.
So basically saying it was, listen, man, I'm not saying we're going to 4.5, but if we go to 4.5, it ain't that bad anyway. Like I said before, man, I don't see how the Fed can keep interest rates high for an extended period of time. Like I said, Wednesday's going to be a big day. If the Fed does a 50 basis point rate hike, markets are going to crash. I don't believe that the depression will start then. It will all depend on if they continue to go down this path. So how Powell guides, the guidance that Powell gives us is going to determine what's really going to happen at the end of the day, in my personal opinion. But I believe that at the end of the day, they're going to do what the Fed always will do. Because look at this, right? Here we go. This is the Fed's balance sheet since 2021. This is when they was doing quantitative easing. And the Fed's balance sheet got to $8.9 trillion. And then they started doing what? Quantitative tightening, meaning that they were allowing the bonds that they had on their balance sheet to mature. They weren't rolling them over, and they weren't injecting any more liquidity into the markets, right? And they've been doing this since March 1st of 2022. And they've been reducing their balance sheet, selling assets off, or just simply allowing them to mature. And look at this, steady, doing what Jerome Powell said. And then boom, within 2 weeks of a crisis, half of all of the QE, the quantitative tightening that they've been doing, they've added half of it back within a matter of 2 weeks. What have I been saying to you guys for the longest? That when you need to reinflate a bubble, the only way you can reinflate the bubble, you can't just do equal to the amount of debt that you did before. You have to do twice as much, if not 3 times as much, to get the bubble back reinflated. And look at this. Now what starts to happen is the expansion and contractions, they start to happen quicker and quicker because they have to be bigger and bigger and bigger. And because people know, because you're telegraphing to them what's going to be next, everyone's already positioning for the Fed to cave. Everyone's already positioning for the Fed to cave right now. And look, right on cue, boom, they start printing money right away. Just like I said to you guys before, look at the Fed funds rate since 2009, right? When the Fed funds rate is at 0%, look what happens to securities. equities or equity-like investments, they experience gains. Low interest rates means you have gains in securities. Soon as they start raising interest rates in 2017, look what starts to happen. You're experiencing negative losses in your securities. Then in 2019, look what happens. More losses, right? More losses. And then look what happens. They cut rates and boom, we start to get gains. And then look, in 2022, they start raising rates again. And now we experience losses, which is why I tell you, you don't got to listen to financial revolutionaries. You don't need to listen to, right, the biggest podcast. You could just use your own brain. If interest rates are going down, stocks, real estate, crypto is going to pump. If real estates are going up, if interest rates are going up, real estate's going to go down, stocks are going to go down, crypto's going to go down. So when people come to me and say, see, I told you that Bitcoin thing was a scam, does that mean real estate's a scam? Because real estate's going down. Does it mean that the stock market's a scam? Because these things are not going, Bitcoin is not going down because it's useless. It's going down because you're experiencing a macro event. Apple is still Apple. Amazon is still Amazon. Last time I checked, those stocks are lower. That doesn't mean that their business model has changed. Apple's probably one of the greatest companies, probably the greatest company right now, public company. But the stock is going down. Why? Because you're experiencing a macro event. You're experiencing deleveraging, where people are having to sell things that they don't even want to sell. So you don't need a PhD. You don't got to listen to the PhD in finance and economics, right? Just use your brain. Now, what do you think's going to happen when they start quantitative easing again? What do you think's going to happen when they start cutting rates again? Your assets are going to go up and they're going to boom. Now, as I said with Bitcoin, what's going to happen with Bitcoin, and you heard it here first, is eventually you are going to experience a decoupling. Why? Because people are going to start to see the real risk is the US dollar. The real risk is the banking system globally. Banks are bankrupt. They do not have enough cash to give depositors their money if a majority of the people want their money. The only way that they're going to be able to give you your money is they're going to have to get bailed out. Where the bailout's going to come from? They're going to come from what? Inflation, which is why, like I said before, you're going to experience a bank holiday. They're going to do a bail-in. They're going to confiscate your deposits. They're going to make cash illegal. We're going to go into a cashless society. You're going to get a central bank digital currency, and therefore the government's going to control the ledger. Now, understand that there's something known as social engineering. When you go into a store and you use your phone and you pay with Apple Pay, it is conditioning you to not use cash. Most of the money that we use today is digital anyway. So most people are conditioned to use convenience at the expense of control and their freedom. And most people don't see anything wrong with Apple and Google and PayPal having so much control over your finances, or a bank having control over your finances, because most people enjoy being slaves. I'm trying to get you to understand it is important that you start positioning yourself now before they cut off the ramps, before they close the doors. See, this is why I own gold. And notice, this is a 1 ounce gold coin and it's a Bitcoin. Haha, right? So this is the Bitcoin logo on a 1 ounce gold coin. You know what else I own? I own silver. Every single week I purchase gold, I purchase silver. And I also own crypto. And I own and have custody of my own assets. There's no middleman sitting between me and my assets and my wealth. I only bank with what I need to bank with, right? But I like to have hard assets, things that I can hold, things that I can control, right? I know for a fact that if I got my private keys, I have my crypto. I know for a fact that if I have my gold, I have my wealth. Remember, gold allows you to preserve wealth. It is a store of value. Now, if you don't have any wealth, then you surely shouldn't be focusing on gold. You should be focusing on crypto. Why? Because crypto is going to allow you to accumulate wealth as well as preserve wealth. Why? Because the market cap of Bitcoin right now is $500 billion. The market cap of gold right now, as of today, is around $10 trillion. And I believe that Bitcoin's going to eat away from gold's market cap, right? So therefore, you're already looking at maybe a 10x in Bitcoin's market cap from here, which will put Bitcoin at about $270,000. And I believe that Bitcoin's going to hit $1 million before it's all said and done. Because once the rest of the world comes running and they realize the problems, you're going to see Bitcoin take off like a rocket ship. And I've been saying these things for the longest time. So, someone said bullets. Absolutely. I mean, you definitely would need that. But again, I'm not trying to, I'm not one of those individuals who believes that you're going to overthrow the system. You're just not, right? There's too many zombies, right? There's too many, 85% of the American public and the public worldwide, they're deaf, dumb, and blind, and they enjoy servitude. They love serving their masters, right? So therefore, I'm more of like the Merovingian in the Matrix. I don't want to be Neo and Morpheus. I don't want to be in some shitty city like Zion, freezing cold. I don't mind being plugged into the Matrix, right? I want to be the Merovingian. I want to be, Agent Smith, where I can control shit, right? I don't want to be a person that's, living in a dreary life. I understand the powers that be. I just understand I want to be a person that can bend the Matrix to my will. And I want to control the controllables. That's one of my thought processes that I've always had, where I focus on controlling the controllables, right? I know for a fact that if I'm investing in crypto, if I'm investing in artificial intelligence, if I'm investing in, gene editing, 3D printing, silicon, investing in chips, I'm going to be fine. Investing in gold and silver, I'm going to be fine. I'm trading the markets. I don't care what currency there is. There will always be some type of currency used to exchange. I'm going to crush it that way. Like, that's what I focus on, right? I focus on controlling the controllables, which is why I put together my Tech Academy, to give you guys, an outlet where you can focus on controlling what you can control. Getting the skill sets where at the end of the day, you can control what you can control. And I think that if you focus on those things, you'll be okay. This whole idea of freedom fighter, bullets and all that, I mean, you got bullets to protect yourself, but you shouldn't be using those bullets on the government, because they got bigger bullets than, they have all kind of shit that they can just, destroy you with. So I will take some of these questions real quick. We're up on 52 minutes. I'll take some questions for 3 minutes. I think banks were working together to cover each other's withdrawals for a while at least. Yeah, I believe that. But I just believe that it's getting to the point where, like 11 banks came up with $30 billion and it still wasn't enough. Think about that. Carlton Darville, hey, do you have an Instagram? I want to send you a DM. Yes, guys. I have an Instagram in the description below. Please understand that there's a lot of fake profiles of me. If you want to do business with me, you want to invest with me in the investment opportunities that I have, text the word invest to the number below. That is my personal number. When you text it, the message comes right to my phone. If you want to follow me on Instagram, a link is in the description below. Do not search for me, because if you search for me, you're going to come across hundreds of fake profiles. But yes, in the description below, that's my Instagram. Click it, come follow me, DM me, we can go from there. Someone says, woo, when I saw the amount of uninsured deposits, I knew it was over. Yeah, that's insane. It's crazy when you think about it. So good question, Joe Crypto. He says, don't the banks do stress tests every quarter? So they shouldn't they have known? I guess you spelled it incorrectly. It doesn't matter. Absolutely, they should have known. But think about it. No one believed that the Fed was going to raise interest rates, because everyone knows the situation that we're in. You can't raise rates. If you raise rates, you destroy everything. So no one believed that the Fed would raise rates this fast, this aggressively. But the Fed did. The Fed called their bluff. And now they're calling the Fed's bluff, because they're saying, if you keep doing this, you're going to destroy the entire banking system. Right? Now, with the World Economic Forum, with Big Klaus, with the Great Reset and the Fourth Industrial Revolution, maybe this is their plan. Maybe this is the plan of the elites to, destroy the banking system, to usher in the one world currency. We don't know. But yes, they do have stress tests. But again, it goes back to conflicts of interest. The people who are doing the stress tests in most cases are friends with the banks that they're stress testing. So are you going to really come out and, signal that, hey, your friend may be in trouble, right? That becomes one of the problems. It's called a conflict of interest. Randy Banks, what's up? Can't wait for the trading course. Absolutely can't wait to release it. Ninja Trader just came with a massive update. I told you guys, like literally everything about Ninja Trader is completely different. And I have to go and re-record a lot of the trading modules because it won't make any sense, right? In regards to the indicators that I use, getting data. Like right now, they don't have live data for certain markets that I trade. That's going to be a problem for those of you who are using the demo. So there's just a lot of things that I have to go back and I have to check. I have to speak with customer support to make sure things flow so that therefore your experience is good. Because remember, trading is difficult, or it's already difficult by itself. If you're having problems with my videos are saying one thing, but then you're using a platform and it's showing you another thing, that's going to be a problem. Now, one of the good things is that they acquired the company by the name of Tradeovate, which now you don't need a PC in order to run the Ninja Trader platform. You can actually use a web-based application. So for those of you who have MacBooks, you can now use the web-based application and you can trade that way. But the problem is the volume weighted average price bands that I use are not available on the desktop application, on the web application. They're only available on the desktop application. But then I found someone in the community who was able to replicate the VWAP bands. And so that was one problem taken care of. So now we just got to take care of some other little technical things and then we'd be good to go, baby. But yeah, thank you for the donation. Appreciate it. Thoughts on Finviz? I used to use Finviz a long time ago, like years ago. I haven't looked at Finviz in a really, really long time. Let's pull it up. Let's see. We can pull it up right now while we're here. I haven't been to that website in a long time. Probably been like maybe like 2 years or 3 years. Finviz. Let's see. It's been a while. Look at this. It looks exactly the same. See, I don't like seeing stuff like this. Like Finviz looks exactly the same as it did 6 years ago, 5 years ago. It hasn't changed. You know, so like when I see stuff like this, you know, I want to see improvements. But one thing about Finviz, it can show you like good technical patterns, chart patterns, wedges, falling wedges, rising wedges, ascending wedges, et cetera, top gainers, support resistance. So it's a real good filter if you want to like filter different stocks, especially for those of you who are looking like for percent gainers, percent losers, particular technical patterns. Like right here, you can come here, you can look for trend line support, and then to show you all of the assets right here that's on the trend line. So now when I used to go to, because I first originally learned how to trade at SMB Capital, right? And what they would do is they would call it stocks in play. So basically, like you would look for stocks that are showing a certain amount of volume. They have a catalyst. They would call it like a news event, earnings, good earnings, bad earnings, you know, BP oil spill, stuff like that. And therefore, it would have a lot of movement. And then you would use screeners like this and kind of see other stocks that may be in the same niche or same sector. So like, for example, let's say that you were trading the semiconductors, you may look at, you know, AMD, NVIDIA, et cetera, and kind of see like if there's a catalyst with one stock, it may translate over to other stocks. So this is good for that perspective, like a scanner. So, you know, but I haven't used it because I don't really trade stocks, right? I mainly trade futures. That's what I like to trade because futures, they're much cleaner and they're much more predictable than trading stocks. You know, stocks, they move wild. Absolutely, you can create your own trading bot. But the problem with creating a trading bot is that, again, in a market like this, where there's so much uncertainty and volatility, I mean, it's just like, damn, I wish, because I'm live right now on my Mac. I wish I was on my, let me see if I can pull up my trading view so just to show you what I'm talking about. Because I was trading the S&P the other day, and man, the level of wicks that it was creating, like there's no way that it would make sense to you. Let me see if I can pull up the futures. Let's go here. Let's pull up the S&P. I want to kind of show you just these nasty wicks. Like it was insane, the wicks that they were creating the other day. Let's look at 15-minute, right? So I believe if we can zoom in, what day was that where it was just insane, the wicks that they were creating. Get a 5. See if I can find it. I wish that I could I kind of highlighted it. Here we go, right here. This day I was trading. This was an insane fucking day right here. Like this day right here, like I was up like $4,000, then I was down $3,000 because like these wicks were insane and they ran past your stops. They blew past your stops. Like this was a matter of 5 minutes. This candle right here. Just look at this nasty wick, how it wicked all the way down. Let's zoom in more so you can see what it's talking about. Like this day was insane. Like this wick where it went from, you got to understand, this was like what? This is 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. Let's see, got it. This was like what, 100? Yeah, this was what, 5, 10, 15, 20, 25, 30, 35, 40. It's probably like a 70-point move in 5 minutes. And the volatility was insane. Insane, right? So if you have a trading bot, your bot is going to be buying and selling, buying and selling, buying and selling, because that's the whole purpose of a bot, right? A bot is automated. And what happens is you can get into like a death spiral, right? Where it just keeps buying and selling, buying and selling, buying and selling. And then you can end up losing a lot of money with that, right? So this is why I'm not a fan of bots in markets like this, where there's so much volatility. When you have markets that are normal, like if we get into like a normal market, like back like in 2021, 2020, then you'll be okay. But a market like right now, bots don't make sense. So it's like with anything with trading, right? Trading all comes down to probability. At the end of the day, you know, look at trading from this perspective. Trading is like a coin, right? Heads or tails. If I flip a coin, it's either going to be heads or tails. So by default, I have a 50% chance of being right, a 50% chance of being wrong. Now, the distribution of those heads and tails, that's what people try to predict where you go wrong at. You have to just take the trades in the order that they come, take the wins as well as the losses. So you could go on a streak where I flip this coin, pick a side. Let's say you said heads. Okay, great. I flip the coin again. What do you pick? Heads or tails? Heads. That's 2 back-to-back heads, right? So now, most people, they'll go, well, if we got heads back-to-back, the third one should be tails. I flip the coin again. It's heads. People go, oh, man, that don't make any sense. So they go, you know what? The fourth one has to be tails. I flip the coin again. The fourth time, guess what? It's heads. This is how trading is. Where, okay, you have a trading strategy and you lose the trading strategy 4 times in a row. And you go, damn, I got to change my strategy. So now you instead of using a 9 and a 21 EMA, you go and you start using Keltner channels, Bollinger Bands. But little do you know that 5th trade would have been the actual tails. And that 5th trade would have been a 40-point runner. So those 4 losses that you had, that one trade would have made up for the 4 losses. But the way that the human mind is wired, we're wired in a way where we don't understand probability because we always want the outcome to be in our favor. So my point of saying all of this is that different trading styles and systems are good to use in different marketplaces, right? In different market structures and market environments. You'll start to learn that as you go. You know, one thing about me, like, it's like playing poker. Like, you have to know when to hold and when to fold. Like, you have to know, like, when you have that hand, that's when you go all in. And there's certain times with trading where, like, for example, I got stopped out a lot here, but then look at the monster run that it went on. It went from 39.25 all the way up to 39.65, right? So that's a 40-point runner. So you just have to know, you know, when to really go all in and when not to. And you learn that over time. Rainme 3000 says, when CBDCs are the only legal tender, what are some of the advantages that crypto holders will have over folks that have government wallets? Well, it's not that you'll have any real benefit over it. It's the fact that you control your money, right? Like that to me is one of the most important things, is controlling your sovereignty. Because what's going to start to happen is that, like, you're going to have a lot of fractures. Like, whenever an empire crashes and burns, whenever a currency is devalued or currency becomes obsolete, there's a lot of fallout there, right? And therefore, if you have certain ways that you can barter or certain type of currencies, you know, you're going to have a lot more wealth and purchasing power and options than people who have central bank digital currencies. Because let's say that you want to flee, you want to go to another country that may be a little bit more liberal and a little bit more free. By being able to have access to your money, that's going to be big right there. So that's a huge advantage, is just being able to access your money whenever you want to. Because I'm a firm believer that, this is just a study of history, when governments collapse, most likely the guerrillas take over, right? Like, or an authoritative government or regime takes over. And you see this happen in like a lot of Middle Eastern countries, where you have like the Taliban and like these rebels who take over. So having access to your own money is going to be extremely important. Because again, it's on a ledger that can't be confiscated. It's on a ledger that can't be censored. So that's going to be big right there. Just controlling your own purchasing power and your own assets. What services are available for someone that has little understanding of markets? A lot of your videos are over my head, but I still find it beneficial to watch. Join my Tech Academy. We'll hold your hand. We'll explain everything from you from A to Z in a very, very structured way. You can also learn with other people inside of our Slack group. But I'm going to also start doing too is at least once a month, kind of getting together and kind of doing like the ABCs of like investing and stuff like that. Because I do know that sometimes when I'm talking like a mile a minute, and I may be saying things that's going over your head. I will be posting that inside of our Slack group on Saturday. We're going to call this, what's the word? Like an orientation, kind of just like, an introductory level orientation of just some basic finance tips. We're going to start doing that inside of my Tech Academy. That's going to be available for all members. It's not going to be just a lifetime member thing. So definitely hold me to that for those of you in the Academy. Just making sure that we know we're bringing everyone up to speed, because some of this stuff could be and can be over everyone's head. So I think that that'll be a good start to go from there. And a link to join my Tech Academy is in the description below. Do you see AI, machine learning being implemented in crypto trading yet? Absolutely. There's a lot of people who are trying it, but no one's successful. Now, don't get it twisted. I'm pretty sure that there's plenty of people like at Jane Street, and SAC Capital utilizing artificial intelligence. But most of the shit that we see on YouTube and on Twitter is bullshit, right? That artificial intelligence bots and all that type of stuff. That's stuff that they're just talking about. Obviously, if you got billions of dollars, those people, they're probably crushing it with machine learning and artificial intelligence. But most of the stuff you see on YouTube and Instagram, that's just overhyped artificial intelligence. Now, it's funny because in the show Westworld, Rehoboam, the first place that they tested that artificial intelligence on was in the stock market, right? They were killing it in the stock market. That's one of my favorite shows because it's a prediction as to a precursor for what's to come. Absolutely not. We don't teach you how to create your own trading bots. That's way, that's extremely sophisticated stuff. You're talking about if you have someone that can really teach you how to build bots, you're going to be paying them anywhere from probably like $25,000, $50,000. I'm talking about real good bots. We don't have that type of capability here in the Academy. Like I said before, most of the stuff that you come across online, these are watered down things that everyone else is doing. So no. So the guy says, I do your taxes for free. Says he's crashing the market on Wednesday. I'm sure of it. Listen, Wednesday's going to be a big day. Wednesday's going to be a big day. I think he's going to crash the markets too. I think that Powell is going to try to be tough, and I think that he's going to crash the markets. That's what I think. I think that that's going to happen. That's my view. I think that he's going to crash the markets. I'm with you on that one. Carlton says, I sent you a DM. Thank you. Appreciate it. I think that's pretty much it. I mean, we went for an hour. That's enough. Answered enough questions, and we'll wrap it up here. Please like the video, share the video, subscribe, hit the notification bell, set it to all. Make sure that you join my text message list so that I can text you when I go live if YouTube isn't sending you notifications. Please also follow me on Instagram. I upload much more content, much more frequently there. Please use the link in the description. Why? Because I am the most cloned and faked profile in the world. And what's going to happen is if you try to search for me, you're going to come across a lot of fake profiles that are going to try to scam you. Also, if you are looking to do business with me and you're interested in the investment opportunities that I have to offer, you need to text the word invest to that number in the description below. And also, I'm the founder of My Tech Academy, where we cover all things crypto, Web3. We also have a trading course right now that we're getting ready to release, as well as a live trading room. We have a free 3-day trial. Come test it out. Come see what we have to offer. And with that being said, guys, it's been real. Wednesday should be a very, very interesting day. I believe that Powell is going to try to be tough, and he's going to try to crash the markets. But I could be wrong. Let's wait and see.